Welcome to another episode of Caffeinated Coverage Talk with Todd and Michelle. I am your co-host, Michelle Burnt, president and partner at InsurTech Hub.
I am Todd Hall, the CEO and founder.
And we have another treat for you, another amazing guest and friend of ours, and he lives right down the road from me, Mr. Andy Dastur. He is the president at North American Insurance Services, also known as NAIS. Welcome, Andy.
Good afternoon. Thanks so much for having me.
Welcome, my
Yes.
friend.
It's called Caffeinated Coverage Talk, right? And so I heard, since we're both living in Texas, there are two rules to live in Texas. One, you have to be a Cowboys fan, and two, you have to drink coffee. Do you meet both that criteria?
I guess I don't. I'm a huge Cowboys fan, maybe the biggest Cowboy fan out there. Win or lose, I'm totally into it, and I have a lot of fun with it. But on the coffee front, I'm a little short. I am maybe one of the only people you will meet, or certainly on this podcast. I have never had coffee in my life. I've not had a sip of even like a sip of a coffee ever in my whole life, not once.
Oh my gosh. So what are you drinking right now?
And I'm a Diet Coke drinker, so I'm not trying to be like holier than thou on this. But the funny thing is everybody around me drinks coffee except for me. My parents drank coffee, my brother and sister, my kids were drinking coffee from the age I don't even remember. And my
Oh
wife
my
drinks coffee.
goodness.
Yeah, it's just me. I'm the freak. Maybe I'm a
You,
freak about being a Cowboy fan too. Maybe I'm a glutton for punishment altogether.
you
Maybe that's the
know,
problem.
Andy, you're the second person. I'm actually in Virginia right now, visiting family up here for a few days, and I'm actually staying at my sister's house. And my brother-in-law, he's never drank coffee. Yeah, it's
Oh,
like, yeah. So there's two people that I've known have never drank coffee before, but
does he
So
have a
wait, I got,
reason? Like, what what
yeah,
what
does he
does
have a,
he?
he just never, for whatever reason, yeah, he's never drank coffee. Yeah, it's like so.
So it makes me
Yeah.
think back to college. So here's my question. How did you pull all-nighters studying and like what kept you awake in college?
So if that's the question, that's a little easier because it certainly wasn't any caffeine. I didn't really even start using like Diet Cokes or anything like that until I was older. But I've always been a morning person and I've never been a night person. And
Uh,
so I never did all-nighters. I would probably sooner, even in college, go to bed at like 9:30, 10 o'clock if I had to do something big for the next day. And I would wake up at 4 or 5 in the morning and I would all-nighter, starting at 4 or 5 in the morning. My brain was just fresher at that time. I was never somebody who could do things late at night.
that
Even,
that makes sense because I'm a night owl and
oh,
I
I
need
am.
my coffee in the morning. You don't want to see me without it.
Yeah, yeah. And I'm envious. I wished I could pull that off and I couldn't. I just by the time 9 o'clock rolls around, my brain is mush and I just want to go to bed. And of course, as you get older, then 9 o'clock turns into 8:30, which turns into eight. But even in college, certainly 10:30, 11, everybody's like just ready to head out to go somewhere, and I was ready to go to bed.
By nature, I'm a night owl too, but as
Uh,
I'm getting older, I'm like you, Andy. Once 9 o'clock gets here, I'm whipped. I'm ready for bed. Yeah, it's
uh,
time to go to bed. So that's
Oh my
kind
goodness.
of changed as I've gotten older. But
Well,
so,
we are
needless to
very
say,
thankful you're here.
if you schedule this for 10 o'clock at night, Michelle, looks like Todd and I will not be in attendance.
And see, that's my power hour. Todd's like, I saw you were up late last night. I'm sending emails 10, 11 o'clock at night. All right. Well, let's jump in for our listeners. North American Insurance Services, which, during this podcast we'll refer to the easy NAIS, has been around a long time. So tell us more about that. How did it get started? How long has it been around? Where's it located? All the good details.
You bet. So we are based in Frisco, Texas, about 20, 25 minutes north of downtown Dallas, right down the street from where Michelle is. We've been in business about 22 years. It actually got
Wow.
started as a life insurance, annuity, and long-term care shop by my business partner. His name is Gene Woznicki, who's been in the business forever. And we've been in this exact same location, which I know you've been to for the entirety of that time. We just continue to expand. We are now the largest tenant in this building. Now that the bank is moving out of here in January, we'll be the largest tenant in the building. And we started off, as I mentioned, in life, annuity, and long-term care. About 12, 15 years ago, we diversified to get into Medicare. That worked really, really well. And then, interestingly, we'll come back to this, I guess, a little later. When the Affordable Care Act launched, we looked at that product, and just to kind of cut to the chase, never were really enamored with how the Affordable Care Act and the ACA worked. So we never actually sold it, but we did expand into ACA alternatives. And we still do that to this day. And I know we're going to talk about that here on this podcast. But we always like the ACA alternative space better. And then about the last 5 years, we expanded again into the small group business. So if you look at this company today, we're about 90% health insurance. And that health insurance is a mix of under 65 individual, almost entirely ACA alternative, Medicare, and then small group. That's really the makeup of the company. I've personally, I know you didn't ask, but I'll tell you, I've been in the business 35 years. This is all I've ever done. I got a job right out of college working at the old Golden Rule, which is now UHC1. So I've literally been doing this the entirety of my career. It's all I've ever known.
You think your kids will take it over?
No. But we are independent from Wall Street, independent from insurance companies, which, just like you guys, it's becoming a shallower and shallower pool. But we've definitely built this organization to last. We have 31 people here in the home office on the payroll that do everything from working with agents to marketing to operations, commissions, HR, the usual cast of characters. We continue to grow and expand. I think this selling season, although it's a little early to know exactly how it's going to land, I think is going to be not only our biggest ever, but biggest by a long ways because of all the disruption that's going on in the market. And then I guess without getting too far ahead of ourselves, really, I think over the last couple of years, our big success has come in the ACA alternative space. And what we've done to position ourselves is one of the biggest players in that market, if not the biggest independent out there doing it. And that includes being an exclusive NMO with a variety of different carriers and products that we represent and are helping to distribute in a variety of different ways, including the product and the carrier we're going to be talking about today.
Yeah. And I just want to throw in, I've known you for a couple of years now. And, when Todd and I were looking at what new partners we want in 2026, I thought of you for a couple of reasons. One, you're just a great guy. But two, I love what you guys do because there's a lot of mass recruiters out there and it's just like herding cattle, like we say in Texas. But you guys truly mold and mentor your agents. So I love what you guys are doing and I love what you've built. So congratulations.
Well, thank you. Mm-hmm. I'm so glad to be working with you guys. And, we have a big task ahead of us in the ACA alternative space. Mm-hmm. I know we're going to get into it on this podcast, but needless to say, here we are today, and we still have Congress arm wrestling each other like literally by the hour. And this has been going on for months and months. And I don't really see a whole lot of relief coming anytime soon, which means that customers still need health insurance, agents still need to make a living, and distribution organizations, agencies, FMOs, and the like have to keep moving forward with what they have. But at the same time, and that's why this is such a great podcast opportunity, is to still want to stay in the day and just focus on what you have, but you kind of have to keep an eye out for what's coming and make sure you're one step ahead so it doesn't blindside you, because you know what happens in business. If you're surprised, if you're blindsided, oftentimes you can't make it through. So this is, I think, timely on your guys' part.
Amen. Andy, Michelle and I came by your office. We visited it's hard to believe it's been a couple months now when we came by, but you do have an absolutely beautiful home office. Fantastic. So kudos to that. You even took us to the Cowboy Club. We had lunch over there, which I was a little concerned that maybe, being a Washington Redskins fan, I might not be allowed into the club, but they accepted me with open arms. They said, all NFL fans, come on in.
And you have to admit, Todd, Cowboy fan or otherwise, you still had fun.
Man, that was awesome. I have to say that was first class. And that facility, I was actually talking to my brother-in-law. He's a big Redskins fan. We were talking earlier today of how nice that was. The office, the practice field, the complex, that was first class. So I'd have to say,
well, You must be a fan if they know Andy by first name and every stinking person that walked by the table knew him.
I
I'm like,
know.
maybe he is the number one fan.
I'm willing to put my name in the hat.
It was an awesome day, and we thank you for that. And but you mentioned ACA alternatives, Andy, and that is a buzzword right now in our industry. And that was, one of the main reasons we first met. I know Michelle's known you for several years, but how we met through that AC alternatives. But can you tell us why agents nowadays in the marketplace that's really if they're in the health insurance industry, that's an essential product that they want in their portfolio? Maybe if you could help us with that.
I love that question, Todd, because I know you and I and Michelle all see eye to eye on this. So, we didn't create the Affordable Care Act. I know it was created with the best of intentions 10 plus years ago or so. But here's sort of where it's landed. It's landed to where if you have a critical illness, a chronic condition, some kind of, you're pregnant, you take a specialty drug, something like that, the Affordable Care Act is the way to go. There's no pre-existing condition limitations. There's no health questions. It's great. And then if you're subsidized and the government's paying the freight on the bill, okay, again, I understand why people do the ACA. However, controversial comment here, because I've been in this business for 35 years, and in the history of my experience in this business, all 35, an ACA plan is literally the worst health insurance product ever created. It really is that bad. And I'm sorry if that offends people. I know the media will tell you differently. I know that the politicians will tell you differently, but let me tell you why. First of all, the network. ACA plans are narrow network plans. It's hard to get to see your doctor, even though it was promised that you could. You can't. The second thing is that it's meant for people with health issues and lower incomes, and yet deductibles are $5,000, $7,000, $10,000. Out-of-pocket maxes are $20,000. I don't know about you, Todd. You're in Virginia, so maybe that's where all the rich people are. I'm telling you, the average American does not have $20,000 to pay for out-of-pocket expenses on a health plan.
Correct.
I'll tell you, most rich people don't have $20,000. When they surveyed people who make over $100,000 a year and asked them, could you come up with $1,000 for a medical emergency, most of them said they couldn't, without putting it on a credit card or something like that. So the out-of-pockets, the networks, and then on top of all that, the premiums are skyrocketing and out of control. It's crazy. I've been in this business for 35 years. I remember the day that it was announced that deductibles were going to go from $250 to $500. And people freaked out. Couldn't believe that some insurance company was going to make people go to a $500 deductible.
Now quadruple.
Right. Now it's 5,000, 10,000. I mean, people don't even blink. I remember back in those days, if premiums were 300 for a family, 400 for a family, people would say it's out of control price-wise. Now, a family of four, $3,000. I've seen some markets 5,000 a month. Like, who has that?
Yeah.
So while it's great to have unlimited benefit, it's great to have no pre-X and no waiting periods and all that, this is what you got, a plan that is in the process of imploding. And while the government can try to throw some money at it, it's only a Band-Aid. It's still a Band-Aid on a bullet hole, and it's only going to implode later instead of imploding now. So with that being said, why am I so passionate about ACA alternatives? Well, the reason is now more than ever, there are so many options. There are so many choices, depending upon an agent's, on their client's needs, on their health, and on their budget. Now, agents that are looking for a one-size-fit-all are not going to like ACA alternatives. They're looking for that one magic product that solves everything, and that's just not going to be the case. In the alternative space, and where we're going to focus our podcast today is in that affordable side of the bucket, side of the equation. But there's lots of different plans out there to choose from. There's so many great plans and products. Granted, they're not subsidy eligible. Some of them have health questions or pre-existing condition limitations or waiting periods. But at the end of the day, I'm a strong believer of giving American consumers choices.
Yes.
Let them decide what's right for them and their family. Let's not be dictating what we think is in their best interest. Let's find out what their needs are. Let's find out what their health is. Let's find out what their budget is. And that's a long answer to a short question, Todd, but that's why I feel so strongly about ACA alternatives. That's why I have literally tied my entire career and my legacy in this business. Michelle, you're asking about my succession. My legacy is that I am going, along with you guys, going to take this entire industry and the American consumer, and I'm going to give them and deliver the message that they should have the choice to pick what they want based upon their needs and on their family, on their budget. You know, that's the American way. And that's what I'm going to be championing for the entirety of the rest of my career.
And that's a wrap. No, no, that's so good, right? It's, you know, right now is when agents are thinking about, okay, what does my portfolio look like in 2026? Is there a product I want to add or consider? And if you do not have an alternative, whatever it may be, whether it's health shares or something different, you need to be looking at that for 2026 or you're going to be missing the boat.
No doubt. And by the way, I didn't even mention, I'm so sorry for interrupting you, Michelle and Todd.
No.
We talked so much about the consumer, but I never mentioned the agent. The Affordable Care Act was specifically created to eliminate the agent. They said that. That was part of the plan. That's the reason all the exchanges were created. That's why commissions are the way they are. It was never intended for an agent to even be involved. In fact, when Congress was debating it, there's like, here's how we can get rid of this middleman. By the way, you know who that middleman is? That's all of us. Everybody who's listening. Right? We're the middleman they were trying to get rid of. What they found was that health insurance is complicated and they need a professional advisor to help them navigate, whether it's an alternative or whether it's the ACA. They realized they needed us.
People want that.
Absolutely, they do.
Yes, I agree.
Sorry,
okay, so no, you're fine. This is so good. There's so much we could talk about today, but the main reason we wanted to have you on is your new product called Zurich Balance Care, which, listen up, is guaranteed issue, everyone. This is huge. Tell us more about that. At InsurTech Hub, we're partnering with you on Zurich. We want our listeners to hear about this, our agents to add this to their portfolio in 2026.
Love it. Absolutely. So let's take a step back and make sure everybody's clear on where this thing fits in the market. So we just got through ACA and we said, yep, pre-existing condition, chronic condition, pregnant, specialty drug, whatever, ACA, or subsidized. So we're going to put those people over here to the side. Let's agree that's where they go. Now, certainly people are looking at ACA alternatives and saying, well, what are my options there? So there's really three ways of looking at ACA alternatives. There's the most affordable, which is where we're going to be focusing our conversation here today. There's comprehensive, which didn't even exist a few years ago, but yeah, you can get comprehensive major medical ACA alternative, but it's expensive. So not everybody can afford that. And then there's certainly plans in the middle that have some limitations in them and kind of in the middle ground in terms of price. But where the Balance Care product from Zurich fits in is really in that low cost, affordable bucket where people are looking for the absolute lowest price. So let me tell you where it fits. I'm going to start off with what you said, Michelle, guaranteed issue. It's one of the only products that we have in our portfolio that is completely guaranteed issue with no health questions, no declines, no rate ups. Everybody who applies can get it. There are no changes in the benefits. There's no changes in the prices. Everybody can enroll. So that's certainly one of the big factors. The second thing is compared to other fixed benefit health products, which, by the way, that's what Balance Care is. It's a fixed benefit chassis, state filed. But what it has is it's really priced. Here's the sweet spot so that people don't waste a lot of time trying to do price comparisons. 45 to 64, that's where it's going to be the lowest price plan, even with plans that are underwritten. And it does really, really well with families. So if you have a 45, 47-year-old husband, wife, and 3 kids, they can buy like a fully loaded balance care from Zurich for less than $500 a month versus almost anything else out there, including other indemnity products. And those things are going to cost you $700, $1,000, $2,000, $3,000 a month. And if you can afford it, I get it. People are like, hey, I want all these whiz bang great benefits. And I was like, okay, no problem. But that's $2,000 a month. That's $2,500 a month. Like, not everybody's got that kind of money laying around.
No.
You
So
can
your
do
example
this.
you just gave, that's me. I'm 45, married with 2 kids.
So on that note, 45-year-old married with 2 kids, all of those comprehensive plans, and there's lots of great ones out there. We won't focus on those today. There's tons of them, whether it's an ACA unsubsidized or all the other great ones that are out there.
Yep.
They're going to start out for a family of 4 in the couple of grand a month range, $1,500, $1,800, $2,000,
Yep.
$3,000. Not everybody's got that.
No.
So what do you do for the people who say, I need something that I can afford?
Yeah.
And I need something that doesn't ask me health questions? That's really where balanced care fits in. Low price, guaranteed issue. There's a couple of other things. I don't know if I'm getting ahead. But there's a couple of other things that I really like about guaranteed issue that we didn't mention. There's a reason why underwritten plans ask for a social security number. It's not because they do it for fun. They do it because a social security number is how they underwrite. That's how they access drug databases and the MIB and other types of databases that they use to underwrite. Well, balanced care is not underwritten. So guess what? You don't need a social security number. You don't need a tax ID number. You don't even have to be documented. If you have an address here and you can pay for it, you're good. So as I think we have talked about previously, there are literally millions and millions of people in this country that don't have a social, don't have their documents, don't have the right paperwork in order to buy an ACA plan, or in a lot of cases, a lot of these ACA alternatives. Now, if we want to have a political discussion, we can do that on a different podcast. I sell insurance for a living.
Yeah.
Okay?
This is about healthcare.
This is about healthcare. And I'm just telling you, there are millions and millions and millions of people in this country that need health insurance.
Yeah.
That don't have the right number or documentation. And all of them are going to be okay in balanced care from Zurich.
Wow.
Okay.
Good to know.
There's a couple of other things. Well, you know what? Let's hold off on that. So those are really the top 4 things. Let me just summarize them and then let's get more detail later. Guaranteed issue, priced competitively, 45 to 64.
Yeah.
Underwritten, state filed from one of the largest insurance companies in America, in the world, Zurich. Right now, and last but not least, no social security number needed. So those are sort of the big 4. Now, I don't know of any other product in the market that can serve that particular end of it. So if you have customers in that arena, you need to have this product because there's nothing else out there that will do those things. Now, if you say, well, everybody I know is healthy and wealthy and they can afford $3,000 a month, well, great. But most agents and agencies that are in this space are working with consumers in a cross section of different markets. Yep, there's healthy and wealthy, but then there's also this group of people that need guaranteed issue, need the lowest possible price they can get. Like the idea that Zurich is the underwriter of the product and it's on a state filed basis. And then again, don't have to have any numbers. Sorry, I just keep reiterating that, but that's kind of the core 4 advantages of the product and where it fits.
And you know, Andy, you mentioned the guaranteed issue aspect of this plan. I mean, that is huge because most plans I know of, there's a barrier to get into the plan. You got to go through those health questions, and not everybody can answer no. And as we get older, things creep up. But with that guaranteed issue, not only is it a comprehensive plan, lower premium, usually one of those guaranteed issue products, there's a long pre-X tail for that. It's not with this product. I think it's only 6 months.
6 months. I forgot to mention. You're absolutely right, Todd. It's one of the shortest pre-X waiting periods out there. Most of them are 12, and a lot of them are even going to 24.
Yeah, I'm used to 2 years. Yeah.
Exactly. So that way, if you do have something that would keep you from getting another plan, it may be a pre-X on it, but it's not such that 2 year period. 6 months after that, it's covered. So I think that. Mm-hmm.
And we'll get to here in just a minute. I totally agree. 6 month wait is awesome. But on top of that, as we talked about before, the product was built to provide robust value-added benefits and services that can be used starting in day one.
Mm-hmm.
So when it comes to usability, not only is this thing going to be affordable, not only is it going to be guaranteed issue, but we're going to throw the kitchen sink at it in terms of value-added benefits, services that can be used immediately, and all of them are connected to the Balance Care app on your phone. So it's not like, where do I go for this or that, or who do I call? Everything that they need, whether it's their network directory, whether it's telemedicine, whether it's a prescription, everything they can.
In the palm of their hand.
All in the palm of their hand. And everybody's got a phone.
Right.
Yeah.
And as you mentioned that, you're exactly right, because I know the purpose is someone's trying to purchase medical coverage, for themselves or their family, but this was built on an association chassis called that Unified Caring Association. And there's there's a whole list of additional benefits that the customer gets in addition to the insurance part.
I totally agree with you, Todd. And I wanted, for those that are listening, and I promise there's going to be some portion of your listeners that are going to be rolling their eyes when I'm about to say this, because they think of these value-added benefits and services as throwaways. I'm sorry to call it that, but that's how some agents think. Like, this is just stuff. But if an agent's going to be successful with Balance Care, to your point, Todd, they need to take the time to go through this big, huge list of value-added benefits, services, and discounts, because that allows people to get care, get access, get it immediately, get it at the lowest possible cost. And again, while everybody would like everything to be covered every time something happens, you're not going to get that when you're at that price point in the market. So how do we make up for that? How do we give them a good experience? How do we make it to where when something happens, they still feel like they got value? And the answer is that list that you described. It's that long because we've tried to think of every conceivable type of issue and build into it some kind of service, some kind of discount, something that they can use to be able to get access to care. And yes, you're right. All of that is built on an association chassis so that we are able to provide those kinds of things in addition to the insurance.
I even saw pet care on there. Do you want to name a few that's on there? I mean, I'm trying. I looked at it. I can't memorize them all, but there's a lot of good ones.
Yeah, you're right about pets, and not just pet care, but pet prescriptions are on there. Discounts on pet prescriptions, but it also includes unlimited telemedicine, unlimited virtual urgent care, prescription drug discounts, long-term care discounts, durable medical equipment. Gosh, we could go on all day.
I know. Good stuff.
That's a good handful of them.
Yeah.
I'm sure I'll remember more, but yeah. This goes on and on. And let me even say it this way. If an agent can think of it, it's probably already been thought of, and it's probably already built into the plan. There's just not a lot that hasn't been loaded in there. And again, if you're an agent and you skip over those kinds of value-added benefits, you're really losing part of the best parts of this plan, to your point, Todd. So take the time to really know and understand that list and know that everything is going to be on their phone and they're going to just be able to access it without having to call these 800 numbers or trying to figure things out. They've really thought through all of those aspects for this end of the market. Simple, easy access, low cost.
And even in addition to those association benefits, they can also get supplemental benefits that are guaranteed issue, like an accident coverage, hospital indemnity. Those are part of it. They're all underwritten by Zurich. Those are part of that package as add-ons.
So a couple of things about that. So first, let me mention that, yes, I agree with you. I'm going to come back to that. But there's also something that's built into the base Balance Care product, and that is $5,000 worth of AME. So I want to take a minute and just talk about that. So first of all, most fixed benefit plans, AME, accident medical expense, is going to be an additional amount, a rider, or even a separate policy. And yes, to your point, we have that too. But built into Balance Care and in the pricing is $5,000 in AME. So you might say, why is Andy making such a big deal out of this? Well, let me tell you why. Again, let's think about the market that we're talking about. Don't think about the guy driving the Ferrari through your neighborhood. Think about the guy driving the pickup truck who's working on your roof. That's your market. Okay, so you got this guy and he's driving a pickup truck and he's working on your roof and he falls. The problem with the healthcare system today, even on the ACA, is deductibles. Like, where do these people come up with the thousands of dollars for urgent care, for crutches, for surgery, all that? Well, they don't have that kind of money. So with this, built in is $5,000. Every level of plan has $5,000 of AME built in. Same guy falls off the roof, and he needs to go to urgent care, he needs a surgery, he needs whatever, because it's accident medical expense, all of that up to $5,000 is going to be covered. And so that's, again, why this plan really thought through, what do these people really need? Again, everybody would like all this fancy stuff, but we can't afford it. This thought about that guy driving the truck through your neighborhood and said, what does that person need? What is that end of the market looking for? And try to think through all those things. Now, on top of it, you betcha, Todd, we would love for agents to stack on top of that guaranteed issue critical illness, guaranteed issue accident, guaranteed issue life insurance. Small term policies can be guaranteed issue. There's a fantastic dental plan. I know it's guaranteed issue, so are all of them. But to your point, agents can go in there and provide a complete solution and still price-wise be way below anything else out there in the market. And everything is guaranteed issue. None of it needs a social security number. Everybody can access it. No health questions, no declines, no rate ups, no exclusions.
Bundle, bundle, bundle.
That's right. And bundle all in a consolidated quoting, enrolling, billing, and commission experience for the agent.
Yes. So one of the things we've mentioned, all these great things about ACA alternatives. One thing I don't think we've mentioned is all of them that I know of are available year round. We're coming upon January 15th, and usually the agents go on vacation for a week because they're exhausted. And then it's like, okay, how do I make money the rest of the year? It's all in ACA alternatives. So is Zurich available year round? And how easy is it for agents to join your team?
So first of all, it is year round. Almost all ACA alternatives can be sold year round. In fact, the Balance Care is one of the few that you can be effective the next day.
Wow.
A lot of ACA alternatives are still doing first of the month, but with this, you can literally do next day coverage, which is super nice. Again, think about the audience we're talking about.
Yeah. So if they miss OEP, you're saying there's still hope.
There's still hope. Now, with that being said, though,
you're saying I still have a chance.
Yeah.
I predict that the first quarter of 2026, whenever you happen to be listening to this podcast, I don't care if it's December, January, February, or March, is going to be a monstrous opportunity because there's so much disruption going on in the ACA space. Yes. Even the President of the United States and Congress still on this day have not figured out and decided what they're going to do. So the disruption will continue. It could continue all the way through to the next selling season. So rather than listening to consumers say, hey, I'd rather do this or that, you have a product that you can stick in there and say, look, we could do something right now. We can make it effective tomorrow.
Yeah, don't wait. Act now. Yes.
Do it now. And you can sell it year round. You can sell it tomorrow. You can have only a 6-month wait on some of those major conditions. But you have services that you can access immediately. Don't have to wait for a selling season. And just as importantly, if you're an agent, you don't have to wait to get a paycheck. Comp on this is great. And you're going to find that you're going to make way more money selling Balance Care than you ever would selling an ACA plan. I didn't answer your question, though, Michelle, on what agents can do if they're interested. Well, frankly, they should contact you and Todd and get set up to get contracted. It's a super simple process. There is a certification, Zurich. Just like most companies want to make sure that people pass the
training.
Certification. But yes, it also helps them understand how the products work and the process. but they're ready to go 24 to 48 hours after they contact you. And again, because they can sell the next day, you're looking to, if you're not making the money you want to make in this business, don't be telling me how you're going to get into the ACA and wait until next fall before you get to another, open enrollment. No, no, no. Call Todd and Michelle and say, I want to make money now.
And do it by January. Yes.
My phone bill won't wait. My rent won't wait. My car payment won't wait. My credit card bill won't wait until next selling season. Nobody cares. I need to make money now. This is what you do.
You mean we make commission selling this? Michelle told me I didn't make anything if we did it.
Well, Todd, you got Michelle is.
You're on the naughty list this year. No.
I'm just messing with. Yeah,
Santa's making a list and checking it twice.
No, you're correct when you said that the comp schedules are absolutely spectacular for this, and it pays a levelized comp in perpetuity as long as that customer stays with you. But
so if you're an agent, you're going to make 3 to 4 times more money selling balance care than you even will an ACA plan. If you're an agency looking to hook up with Todd and Michelle, your overrides are still going to be 2, 3, 4 times what an ACA might pay.
Yeah.
And then even just to be clear, compared to other fixed benefit health products out there, we won't name names, but we know who the big players are in the indemnity space. Almost all of them have a higher first year commission, and then it drops off the table in years 2 and beyond. Substantially drops off.
True.
70, 90% less than what the first year is. That's not balanced care. It's first year commission's about like those other guys, but it stays level as long as it's in force forever.
And that with agents, we're all agents. We've been agents, whether we're selling now or not. That behavior. What that does is they roll that business somewhere else. They're churning it every year or two because they want to get that first year commission. Where here you can build a book of business, you get that levelized in perpetuity, you service your customer, but then you can go market and get new customers. You can really organically grow your book of business even larger. You not have to worry about chasing that first year commission anymore.
No doubt about it. We have a little numbers that we put together where if an agent even puts 50 or 100 of these things on, not even that many, and they keep it on the books for 2.5 years, they're making $100,000 to $200,000 a year just from this.
I know. I saw the comp schedules. It's pretty impressive.
That's a no-brainer, guys. Come on.
It's funny because I saw on social media somebody was asking who's new to the business, "Hey, is there money to be made in the ACA?" That blew me away. What somebody's response was: "Yes, there's money to be made, but you have to get to 1,000 members in order to make any money." I'm just thinking to myself, like, why are you telling a new agent that they got to get to 1,000 before they ever make any money?
And how many years would that take if you're by yourself?
And they won't survive long enough. They can't keep up with it.
Turn and burn.
I'm like, look, you can just focus on balance care, and you can do it right now, and you could be making a significant income this year right now, and you don't got to wait to pick up 1,000 members before you make any kind of real money.
Andy, as brokers, as they're building their book of business, building their book, what it would be the ideal customer that would be for the Zurich Balance Care for that?
Yeah, so if you're an agent in the health insurance space, again, I go back to our 4 primary categories. We talked about the ACA and people that go over there. We talked about people who are looking for a comprehensive ACA alternative, but it's expensive. Then you got sort of a middle ground with plans that have some limited benefits. So where does balance care fit? It fits for people who are looking for the most affordable option to insure themselves and their families, the lowest possible price. Not everybody has $2,000, $3,000, $4,000 a month. Most people in this country don't have that kind of money. So if they're looking for where does this fit, start off with that price. You can start people at a couple $100 a month, and even a family of 5 can get it for less than $500. You're just not going to find that with most other plans in the market. So that's certainly part of it. The second thing is the guaranteed issue. Yes, it's built to handle significant health problems. Some of these other products say they're guaranteed issue, but if you start putting people on there that have health issues, you get a nasty phone call from their VP of sales saying, "Hey, stop selling all these people with diabetes." It's not the way this thing is built. Plus, you have Zurich behind it, guys. You're not hurting Zurich's feelings, man.
Mm-hmm.
They're not like some of these rinky-dink companies that are, so small that a couple of claims will put them out of business. Zurich's a monstrosity.
Mm-hmm.
So again, lowered price, looking for the most affordable. They're looking for guaranteed issue.
Yeah.
They don't want to have to put their social security number. Agents that don't want to go through underwriting. We're just working on a case here with one of the big indemnity plans, and we submitted it because that's what the client chose. But it went to underwriting because they still underwrite it with a human. Like a human is going through the physical application and looking at it. You laugh, but that's what a lot of these plans do is they have physical humans doing it. So they decided that they wanted to have a phone interview with the client. The client won't return the call. The client won't answer their calls. We've emailed them, we've called them, and I'm assuming by now the client bailed out.
Yeah. They're like, no, I'm not getting on a phone with you.
Yes, exactly. So, nope, lost that sale. And agents that are going through this every day know what I'm talking about. Man, it's a lot of work to go through underwriting. And that's on the cases. This lady is in perfect health, but they wanted to talk to her on the phone. I don't know why. They don't tell you. So we had to track her down. Could never get her. With this thing, you can make it effective tomorrow. You get paid fast. You're going to get your client coverage fast. It's just faster. It's more efficient. It's more effective. If that's the kind of agent you are, talk to Todd and Michelle. If you got clients in that same category, affordable, guaranteed issue, looking for a big, strong company like Zurich, and if you don't have your numbers, that's okay. Got it all.
Yeah.
Got all you covered.
And one thing you brought up that I want to reiterate, because sometimes when people hear about a new program, they get a little bit hesitant because there's new programs popping up all the time. But guys, don't forget this is backed by Zurich. It is Zurich, right? This is a reputable company that has been around for eons. I would be very interested in checking out anything that company rolls out. So I just kind of wanted to reiterate that because, people hear new programs and they're like, but this is a Zurich new program. So
I mean, when you really stop and think about it, Zurich is, by entering into this space, probably the biggest carrier that most agents have in their portfolio.
We wrote a ton of Zurich commercial P&C 20, 25 years ago.
Yep.
Yeah.
And they're still around.
Yeah. We did.
Yeah. Last question I have for you as we wrap up. Network. And this is more on the member side of things, but members want to know about network. Is there a network? Am I required to see a certain doctor? Can you talk to us about that?
Yes, because when we were going through the list of discounts and value-added benefits, we skipped over, unfortunately, networks. I'm glad you brought it back up. So it does use the PHCS network that gives you access to the largest independent provider network in the country, independent from the big names. But what that really does is it gives discounts. That's really how to look at it in this space. It's not like a network like on an ACA plan where it's do or die. It's if you want to use the network, you're going to get a better deal. And again, you go to this segment of the market. Again, the guy driving the pickup truck through your neighborhood working on your roof, that guy's going to want to get, or gal is going to want to get the best possible deal that they can on their healthcare.
Right.
And leveraging a network provider is going to give them that best deal. What I like about this, though, even more so, is unlike most plans out there, you can look up a provider on your app. You don't have to go to a website. You don't have to print out a directory or any of that crazy mess. It's on your app. You just click, find me a provider, ask you what kind of provider you're looking for, and boom, there goes your a list of the doctors or providers that you're looking for.
So they have a peace of mind before they even enroll.
And that's exactly right. They've got everything they need at their fingertips, and it's always with them because everybody's got their phone with them all the time. It just makes the experience good. Now, why does that matter to an agent? Maybe you're wondering, why am I emphasizing that? Because if it's a good experience, they keep it. That's the whole idea. And if they keep it, you get a renewal. And if you get multiple renewals because they're happy, well, then you're really happy because now you're getting levelized commission for multiple years. That's really what you're after. You can get this thing to 3 or more years. Oh my gosh, you're going to be rich.
Yeah.
That's fantastic, Andy. I know It's hard to believe that we're just 2 weeks away from 2026. Yeah, where did 2025 go? It's like time flies. But so I know as the new year's coming, we're all doing our forecasting, goal planning for the next year, and I heard through the grapevine that potentially, I know with Zurich we've got our balanced care, the fixed indemnity, this guaranteed issue. We got the supplements, the accident, the critical illness, life insurance. They're all guaranteed issue. But I heard through the grapevine there may be a short term medical product that's coming out here in the near future, or any other enhancements. So maybe if you can elaborate
don't
on
tell
that.
anybody. But no, you're exactly right. So, one of the things I've committed to you both is that I was going to continue to be on the forefront for developing and launching unique and innovative products in the ACA alternative space, whether that's on a association state filed chassis like Balanced Care is, whether that's on a working owner, a W-2, whether that's health share. Obviously, another aspect of that is on a short-term medical chassis. We're back in the business of 36-month short terms. And so, yes, we're going to be launching a brand new one that nobody has. And the intent is, if you're wondering where is that going to fit, it's going to undercut the market. It's going to have the lowest prices of any short-term medical, and they will all be 36-month. Obviously, not every state allows 36-month, but in the states that have it. And yes, it's going to have great benefits, but I think what you're going to be super excited about is the prices, because as you know, one of the things that's happened in the short-term medical space is price creep. Those things are getting more mature with the traditional brands that are out there in the short-term medical space. So the time is ripe for a new entrant to come into the market and come in without a lot of that baggage, and be able to come into the market right at the right time and come in with a price that's going to be lower than anybody else's.
Yeah. Thank you so much, Andy. Truly been a pleasure. And even though you don't drink coffee, we always welcome you back to this podcast.
Thanks, guys.
Cheers, my friend. But if you guys are truly looking to expand your portfolio and hit all aspects of healthcare, make sure you are looking at ACA alternative options for 2026. And of course, at InsurTech Hub, we would love to help you through our partnership with NAIS. And like Andy said, you could get contracted in as little as 24 to 48 hours. So do it now, get it out of the way so you can hit the ground running in January. Todd, hard to believe we only have one episode left of Caffeinated Coverage Talk this year. So please join us next week for our last episode of the year. And we're going to have Allstate Health Solutions on. So Andy, thanks again, my friend, and Merry Christmas.
Thank you.